The economy's slowing, confidence is low, but house prices, they're climbing. It's a story no one expected and most still don't understand. When markets whisper, smart money listens. And right now, New Zealand's property market is saying something very loud without making a sound. Nick Tuffley, chief economist at ASB, joins us to decode this contradiction. This isn't a market update, it's a playbook, a tactical briefing on what's rising, what's falling, and what no one else sees coming.
Financial freedom faster. Financial freedom faster.
If you like making money rather than watching everyone else do it, hit that subscribe button because the numbers don't lie. More investors are getting the New Zealand housing and real estate market updates from this channel than any other YouTube show in New Zealand. Nick, prices are rising, the economy's not. What's really going on and who's winning while no one else is looking?
What we're seeing is a little bit of reaction now to those very low interest rates. So we've had interest rates extremely low for quite some time now, and we've been waiting for signs that people are getting into the market. Now, when it comes to the housing market, look, it's fair to say that people are tiptoeing into it, but we have seen steady gains in prices, even if they're really small, but you are seeing those prices start to pick up very, very slightly. So that shift from 2023 when prices were going down, it's taken a while for prices to start going up, but there are those tentative signs that we're heading in the right direction.
Well, there's fewer listings, but faster sales. It feels like we're drifting into that seller's market. Has that transition been made yet, or?
I think the pendulum is very, very firmly still in that buyer's market at the moment. So look, there are some good signs there in that we've seen the number of new listings coming onto the market has been sort of stabilizing a bit. The current listings on the market is still relatively high. So you do have that choice there at the moment from a buyer point of view, and of course interest rates still very, very low as well. But those signs, things moving slightly quicker, so that median of days to sell is starting to edge down. So that's a good sign that we're starting to see activity pick up a little bit more. From a price point of view, look, we really do need to see the sales pick up a lot more because we need to see that stock on the market, particularly that old stock that's been hanging around for a while, start to clear and create a little bit more competition. And that's when we'll see the market be a bit more balanced, but definitely still a buyer's market at the moment.
And migration's way down. How is that impacting the housing market?
Well, that migration flow that we saw, I think, helped hold the market up when things were pretty soggy. But now we're in that state where population growth is sort of getting back to a more normal level now. So yes, we still need more homes over time. You know, we need to keep building homes to meet that construction need, but it doesn't mean we've got a very, very strong tailwind coming through from population growth at the moment. So it's sort of more back to a more neutral, normal influence on the housing market at the moment, but arguably really helped stop the housing market from falling too much during the times when the market itself was weak, but migration was extremely strong.
And the Reserve Bank's expected to drop the OCR again soon. What happens first? More confidence in the market, or is it going to lead to a bit of chaos if prices are going to keep going up and people get confused again?
I think the reality is that we're learning to live with a lot of the volatility that Donald Trump is setting up. So we have seen financial market volatility come around from it. Uncertainty, particularly in other countries as well, when they're not really sure what tariffs they're going to be facing. But when we look at what are the impacts, what are the so whats for the New Zealand property market, it is what Donald Trump's actions are doing, if anything, causing that risk that the New Zealand economy slows a bit more, or at least that inflation pressures will be a bit weaker. And that's likely to keep the lid on interest rates, particularly the sort of shorter term interest rates. But the other thing we've got to watch out for with Donald Trump is that at the moment he is pushing through proposals to cut taxes a lot, which will be deficit funded, so need a lot more debt to be issued for it. And there's going to be that potential for those longer term rates in the US to be held up by that. So we've got a bit of a push me, pull you, but we certainly think that the Reserve Bank will keep shorter term fixed rates well anchored and well low. And that's going to offset sort of any sort of real ructions that we get from what Donald Trump may or may not do.
And the headline inflation target seems to be within expectations. Having a look at the details a bit closer, am I reading it right that the CPI, the overlay, they only put about 11.2% towards the rent costs with their calculation? With construction prices going so high, Why is it such a small proportion in that rent side of things? Isn't the rent cost for most people a lot higher than 11%?
When we're looking at the CPI and how it's measured, it's kind of trying to represent the average New Zealand household. So the average New Zealand household partially rents and partially builds their own house, if you want to look at it in that way. So when you're looking at across all households, what we're seeing is that, rents actually account for, probably the single biggest spending of any average household. And so that's where that 11% weight comes from. We are building a lot of homes, but when you average the building cost across all households, it's actually a smaller proportion of overall household spending. So when we're looking at what in the CPI is related to housing, rents is still by far and away the biggest single thing in the CPI, bar none. So what happens with rents does have quite an influence on the tracking of inflation over time.
And is the game rigged for people that are already property owners? Are first-home buyers just kind of figuring out how to play this game at the moment? Is it a regions-based strategy for people that can't get into the Auckland market?
Well, I think we've got a few things going on for first homeowners. We've gone through a period where prices felt like they were putting things out of reach for first homeowners. We are starting to see homeowners come back into the market if you're looking at the Reserve Bank lending statistics, but it's fair to say that the investors have been sort of earlier off the mark and a little bit more active at the moment. For first home buyers, what I would say is that you're in a position where you've got a relatively low entry point for your prices after all the price declines we saw during the downturn. There hasn't been much of a pickup. You've got lots of options at the moment. You've got low interest rates. So it really is the most ideal environment I think we've had for first home buyers for quite some time. And over time, look, what will change with that, we'll probably see a bit more house price appreciation, at least interest rates remaining a little bit low in the short term. But, the market competition will gradually heat up. So when you're looking at the market from a point of view of a first home buyer, look, it is definitely a good opportunity to be buying at the moment. And that's sort of like around the country. So look, all regions pretty much saw a decent lift in prices, and then they saw a fairly decent drop to varying extents. Very big in particularly places like Wellington and Auckland, but you've now got a more stable market. So the opportunity is there to start assessing the options. Even though rental growth looks like it's slowing, you've still got that sort of trade-off between, look, am I better off buying my first home, even if it may not be in the most ideal location for me, versus continuing to rent?
And you're talking to investors regularly. How are they reacting to the budget released by coalition government and the opposition budgets?
Well, I think the thing for residential property is that what this budget delivers is probably not much directly in that. Where you are going to see some impacts over time is KiwiSaver balances are likely to lift a little bit quicker because the overall contributions that are going in are going up, even if some of that's coming out of, salary and wage earners' own incomes. One interesting thing from the property point of view, though, is with commercial properties and not so much the residential. So this is where there may be some people who are looking at commercial versus residential a little bit more, is that with commercial property, the new investment boost policy is actually applicable to commercial property. So if you buy a new commercial property, you can actually take that sort of 20% depreciation deduction in that first year, even if you're not actually able to depreciate the building further after that. So it does make commercial property, at least new commercial property, look a little bit more attractive. So a few things in there from the residential point of view. I think if you've got KiwiSaver balances lifting a bit more over time relative to what they otherwise would have done, then from a first home buyer, at any rate, you've got a little bit more potential to have a bigger deposit. So that's where that dynamic, I think, from a residential property point of view changes. Just what do the KiwiSaver impacts do over time? How does commercial property look versus residential property from an investor now that you can get this, basically this depreciation deduction from buying a new commercial building?
And how does the extra investment in defence and health and education impact the regions across New Zealand? Is it all this extra funding going to be a boost for the bigger metro areas, or is it going to be spread around?
Well, what we've seen is some of the capital spending. We're seeing provincial hospitals getting money, which is really helpful. And look, in general, when you're looking at New Zealand, what are two things that are really important for making sure that we have a population that is skilled and healthy enough to work? It is health and education. So we have seen a lot of prioritisation of spending towards those areas. So this has been a budget where we've seen the government be really careful with what it's spending to avoid remaining in almost perpetual deficits. So it's really channeled the savings that it's made in other areas into some of those key prioritisations like health and saving. And look, defence, it's becoming an almost necessary expenditure again these days. We're in a world that's looking a lot less safe, a lot less certain, a lot less reliability potentially on some of our key security partners such as the US, and also coming after a time where we just really haven't invested much in our defence spending. So you're seeing quite a lot of catch-up coming through in New Zealand. You're also seeing that same thing happening in Europe, where they're belatedly realising that the US under Donald Trump isn't exactly going to be coming to their rescue and putting a lot of onus on them to try and support the Ukraine in its fight against the Russian invasion.
And if you're not a data nerd looking at all the stats out of the REONZ, what are the housing statistics we should be paying attention to see changes coming through?
Look, the REONZ stuff, definitely a good one to be looking at as well. The real estate.co.nz listing data, also really good, because when we're looking at what are some signs of the market turning, we're looking at that supply versus demand. Those real estate listings are giving you a good sense of what's the supply on the market right here, right now as well. And also doing a bit of a selfish plug. We do a quarterly housing confidence survey, which we'll be releasing relatively soon. And that's a pretty good gauge at that sort of sentiment at the moment, whether people are seeing it as a good time to buy, what are their prospects for house prices, and also views around where interest rates go as well, which obviously that's a pretty important element of the whole story around particularly property investment and house purchasing is well, what on earth are you going to be paying for your debt servicing costs over the next sort of while?
And those insights, I'm sure, include things around tourism and card spending.
When you're looking at that wider economy, yes, we're looking at what are households up to, the card spending, and we just had retail spending data out last week, which showed a little bit of life coming through in there. And also from a pure retail point of view, the more tourists we have, the more activity we're getting in that sector as well. Just speaking of retail, just with the retail sales lift that we've seen, just an encouraging sign that you are getting some people take their wallets out. And housing obviously is a confidence game, so the more people come confident about the outlook, the more prepared they're going to be to basically take what's a major financial purchasing decision.
So if you're going to put your own $1 million into play now, are you going to double down on these big cities, Auckland, Wellington, or are you looking more regional to place your bets?
Well, I think that's everybody's bet's up to them. When you're looking at things like, say, over the long term, I like to think of, say, population growth, income growth are going to be pretty important drivers of housing markets. So sort of having to think about the different regions and how those elements are likely to trend over time will be pretty important. You've still got that cliched golden triangle in the upper North Island, where population growth is likely to be centred over time. You tend to get the population growth coming in places like Christchurch. And of course, you're getting a lot of that sort of tourism-related activity driving places like Queenstown as well. But look, in general, I think we'll see the lower interest rates sort of lifting the tide for all the housing boats around the country.
It's a real economist answer. Thanks, Nick. If we look,
so I need to give you my 20-page disclaimer answer as well in this sort of day and age.
Thanks for joining us today, Nick. Appreciate the insights the ASB economics team is releasing daily, and we'll talk again to you soon.
Thank you.
A reminder again, money moves fast and the investors making the most of it are here. This is the fastest growing property channel in New Zealand for a reason. If you don't subscribe now, just know that someone else is already using this knowledge to make their next deal while you hesitate.